Good morning. Happy May 3rd, Friday, NFP day. Payroll numbers are in and the markets are rallying. Huge impulsive move up, which is going to make it interesting for us here. We may have to give it a second for things to sort of settle out. See, unemployment rate came in at, is that right? 3.9%. Which, if I'm reading this right, is worse than the forecast of 3.8%. Non-farm employment change, actual 175,000 versus a forecast of 238. What does that mean? Change in the number of employed people. Can't tell if that change is like a positive. It's a red number, so does that mean it's down or up? I don't know. Whatever. Anyway, the net result is that we had a spike over here. All right, so it's day 3 of the 10-day trade discipline challenge, and we've got coming into day 3 behind. Day 1 and day 2 were both losing days. I was late getting my update video out because I recorded it and then got distracted yesterday and forgot to do the quick edits and get it posted. So that got posted this morning. Losing day yesterday, we hit the daily loss limit on the first trade, so that was a bummer. But the point of the challenge is not really to make money. The point of the trade is to demonstrate trade discipline, which we did. So it was a successful day, although the P&L took a little bit of a hit. Fortunately, I was able to trade another account in NQ after the stream. Had a pretty successful day in NQ. NQ was so beautiful yesterday. I mean, it was. I didn't take advantage of most of the amazing opportunities. I took like very small slices of those, but they worked out really, really well. Maybe we'll talk about that after we're done with gold this morning. So I am going to make an adjustment today. We'll see how price reacts here. I mean, you're looking at 55 tick candles right here. That's just too much of a range for me to risk 5 contracts. So, I mean, this one candle at the news was 250 ticks. So we got a huge range, which is good. Should mean that 15 ticks is pretty easy. You probably already moved 15 ticks right there. 12 ticks. But we are going to reduce our risk probably to 1 contract here, just because it doesn't do us any good to get whipped out and stopped out just because our account can't handle 50 tick fluctuations in price. The strategy is designed more for like an average range of 15. So an average range of 50 is, I think, requires that we reduce our risk. And again, the challenge results are based on, ticks won or lost, not P&L. So we'll see what we do here. Something I've done in the past is if we get this just ginormous impulsive move, I'll almost play the top, play half of the range as if it's its own range. So we'll see how this plays out. We got the overnight open right here. Obviously, our moving averages aren't going to mean anything because that one candle is just going to skew everything. I mean, it is kind of interesting. Price just sat at that 50% level, right? So I think that tells us something. Yeah, this is a little deviation from the plan, but based on the range, I think it's warranted. Let's see. Up above that candle. I want my target to be We'll put it at the midline just to be safe. There it goes. So it probably, it would have gone further. I mean, when that 15 ticks target is basically, what I've observed is kind of the typical range is about 15 to 20 ticks, and so that's why I kind of choose that 15. So if we're in a 30 tick range or 40 tick range, then that should be about what you would expect. So if we got the entry here, where with there's 30 ticks, there's 40 ticks, and clearly we moved that far. So that's kind of validates the theory, I guess, for the trade. So a little bit of a win there. That's good. $22 ticks. If that had been the 5 contracts, we would have made up what we lost yesterday. Oh gosh. All right. Well, technically, this is taking a trade off the midline. Yeah. Yeah, I'm playing this more like this is the bottom of the open range right here, and we're trading into the overnight open. So we'll see how that works. If we get a test down and a retest short, then I'll look at that. So this is, I don't know, I guess this isn't technically following the trade plan. So we'll see how it plays out. But this, again, where this is the market is not behaving like it does on a normal day. So I think to follow just your normal trade plan on a day like today is foolish. Um, not taking these things into consideration is, unwise. All right, so yeah, essentially we did push down out of this open range off of the midline, push through the overnight open, so that's good. Coming back up for a retest of that overnight open. Kind of curious to see how it reacts here at the overnight open because it just blew through it here and then kind of fell through it down here too. Um, this doesn't like fit my trade parameters, but ordinarily I would consider taking a short right here. So I am making some sort of game time adjustments to my strategy today because the market is ranging so much. We have a 250 tick candle to kind of deal with here. So the range is very different from what we normally see and what we sort of built our strategy around. So either we don't trade at all or we reduce risk, make some small adjustments. Which is what I've done. So we took what I did here is essentially, because the range is so large as a result of this one candle, I basically take the top half of the range because that's where price is. Take half the range and divide it into half and play that midpoint like I would a regular, the midpoint of the open range. So we had that created, came back up, we retested it. Price is moving pretty quickly, but I did take a short here, and then got out here for 22 ticks, I think is what it turned out to be. I was kind of debating because I don't have this really defined. I was debating on where to move my target to, and I think the the strategy is built basically around what is a typical day in gold. You see a range of 15 to 20 ticks typically in a candle. So if that's where my 15 tick target kind of comes from. So in a day where you have 20 30 or 30 40, I mean this candle was 40, then that really could be your target, right? Is maybe say 30 is the target. And from the ideal entry, which would have been about here, to the bottom of this candle here was 47. So that that range would have worked. So should have got a little more out of that than I did, but it worked nonetheless. So that's okay. We'll keep it. All right, back up to the overnight open. Do, 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 do. All right, what is our candle range? 23? That one. 35 on the one before it. So I'm going to follow this one up. Just in case this the overnight open holds and we come back down below it. This is tricky because if we come up and retest off of the midline, now we're coming back into the overnight open. So we would not be able to take a short if we get a close above the overnight open right here. Or I would not. Again, we're reducing risk down to just one contract because of the range, even though at this point in the day, it's kind of slowed down a little bit. Oh, there we go. I think I am going to move my target down a little bit because the range is bigger. Go to 25. No, I have not yet managed to get 20 Apex accounts. That is still the goal, but haven't achieved it yet. That's a tricky one to get for me, at least. Right now, the goal is to get one and keep one. Right? If we can get one and keep one, then we can add it to it. Get another one, keep another one. Okay, so we have, excuse me, worked our way back up to the midline. Again, I don't like taking a short here because we do have the overnight open in the way. All right, so here's a question. I said my trade, so my trade rules up here, say that I finish after 2 winning trades. So this one was actually got stopped out for break even. So does that count as a winning trade? I'm not going to count it as a winning trade, I don't think. All right, so the question is, how long have I been trading? So I've been trading. Says yes, counted as a winning trade. Is that what you're saying? Probably should. We'll wait and see how this. There's not really a trade here anyway, but so I've been trading. I started trading options. When did I start? Not that long ago. 2022. I think it was 2022, like maybe the summer of 2022. I got into futures after that. My first Apex account I bought was I think like the end of March, if I remember correctly, like March 30th of last year, 2023. So I've been doing the futures thing for, well, since March 30th, so just over a year, 13 months. One thing I've learned is that trading is a process. It is definitely a process. Everybody's process seems to be a little bit different, but there's one common theme is time. Seems to be the kind of thing you can't, there's no cheat code. It takes time. And maybe even one of the more dangerous things that can happen is you have sort of quick success, because I think success can be deceiving if you don't know how to handle it. So, but that's just my opinions. All right, well, we did definitely reject it off of this midline. We didn't really care too much about the overnight open, which isn't really a surprise considering we've been through it, like 5 times here. So wouldn't expect it to hold as much weight at this point in time. Well, while we wait for gold to do something, yeah, I don't know. It might be a while before I get an entry in gold. So let's look at NQ just for fun, because NQ is a little more interesting right now, at least. So yesterday, I want to point this out because yesterday was such a beautiful day, especially if you're an ICT trader. So yesterday, after the stream where I traded gold, I did take some trades and made a little bit of money in a different account over here. And this is essentially the way that it worked. So we have the high of day over here. Boop, boop, right? So there's our liquidity. It's our buy side liquidity. We have this punch down. And then here's your silver bullet setup. Now, I'm not an ICT expert, so probably want to research this stuff yourself. And if I get it wrong, let me know. But here we have, this is 9 o'clock. So this is the 1050 macro, 1050 Eastern right here. So if you go over here and you say, okay, we have this, boom, boom. You could do this one, or you could do this for a value gap here. So it might even be a better one. So this was one, I mean, you could have taken a short here, but I think the better entry is after we take this low of yesterday's low of day right here in this swing down. Right, so this took out yesterday's low of day. We come back up. We punch out, creating a fair value gap here where I had marked out earlier. It's probably the better one, but you go either one. Come back for a nice retest in here. We hold it, and then we push out, and from here, I mean, it takes a while. You know, if you were to get in here at 9:45-ish, doesn't hit the target till 1 o'clock, so it's a long trade. But boom, it just winds its way up. So my trade entries were a bunch of inversions on the way up that I kind of scalped. So, but just this rhythmic motion, this is just awesome. If you took inversions, I mean, this would have been the awesome trade right here. Even though this wasn't a singular fair value gap, we did take out a pretty significant level in yesterday's low of day. We push up here, we do create this order block. We violate it and we rock it back up. So this trade you would have entered here. And it was a little choppy, but target would have been up here. 37 points. And like all these things held. I mean, every time there's one of these nice fair value gaps, we come back, we test the lower fair value gap, we bounce out of it. Just all day long. It's just nice stuff. NQ's done that. It's been pretty good this week, actually. At least I guess to the level where for me it seems pretty obvious what's going on. So today, no, we're just consolidating up here. So I'm going to be curious to see what happens at about 850. It's like this giant 4-hour fair value gap above us. Right there. Or is that a 1 hour? I have it marked. I got to remember where I marked it from. This is a daily. This is a daily gap. So here's a monster 4-hour fair value gap from the 15th of April. Okay, so we actually tap the bottom of this thing. Oh, it looks like we had a big. Do we have a big gap at the open too here today? It doesn't look like it. That's weird. One of the things I don't understand is I don't see any kind of a gap here, but if you look at the daily chart, there is a gap. So I don't know what this is thinking, but look at this. Look at that big gap on the daily chart. Big gap up. Yeah, if you've never looked into ICT, I would definitely recommend it. I mean, the whole sort of principle behind it is that price moves towards um, areas of inefficiency and liquidity, and so these fair value gaps, which is a 3 candle formation where you have candle 1, candle 2, candle 3. Candle 2 gets this impulsive move up. Candle 3 opens and moves higher, creating this gap between the high of candle 1 and the low of candle 3. And it basically says price is going to want to come back into this area at some point. So oftentimes the entries will look something like a fair value gap is created, and there's other parameters. You don't just take the fair value gap, but a fair value gap is created. Price comes, trades back into the fair value gap, trades out of the fair value gap, and reaches for liquidity, which is typically some kind of a high. So you might mark it up here to say this is kind of a short-term liquidity range. These red lines, these are what I have identified as, in this case, buy side, because it's up, right? But these are off the 15-minute chart, so they're just 15-minute candle wicks that create highs. So that's the Cliff Notes version that doesn't give you any information to make any kind of a decision off of, but maybe gives you an idea. Back to gold, we're just all right, we're just kind of meandering. So wait and see what happens here. I mean, my only entry spots are midline or the bottom of the range here. Oops. I wonder what it looks like. Yeah, so if you weren't here before, I guess just to point this out again. When the range, and again, this is in gold. When we get a massive, just giant candle that creates, just an insane open range, I'll split the range into quarters essentially. So I just marked out the 50% of the top half of the range and then took a short off of that, and that worked out just the same as a regular open range play. So I'm kind of curious to see what the bottom half of the range looks like. So not as clean here as it was up here. So we'll just wait and see. I mean, ultimately, it would be much easier if it pushed up above the midline for a test to go long, but that's probably a long shot. Well, I guess we'll see. Oh, I haven't even looked at what oil's doing. Is oil doing anything worth talking about? So oil's 5-minute inside bar strategy is really a weird one. Last week it was working really good, and like I think this week it's been like failure after failure after failure. Which is why something like an inside bar strategy or a simple pattern setup is, I have a hard time with those because they seem to be pretty hot or cold. So looks like there's other factors that you need to consider. All right, so this gray box here, this is a 15-minute fair value gap. Let's refine it down to here. It's kind of the lower fair value gap. Yeah, there we go. And we've closed inside that on the last two 15-minute bars. Here's what that looks like. So basically combining these two gaps here into one giant one. So these two candles, I mean, this candle wicked, this was the giant, right? News candle wicked right up here to this pivot point, ironically enough. And then closed inside of it. These two candles have closed inside of it. So seems to be holding. And that's one of the things I've noticed in gold is 15-minute fair value gaps are not to be, I don't think they should be overlooked because they definitely hold weight. So this one is either getting worn out and is going to let price go up. Or maybe we took out all the liquidity we need to take out up there and we're going to continue lower, not sure. But if this 15-minute bar were to close below this gap, I would definitely feel better about taking a short off of something. It's been so exciting this morning, I forgot that it's only 8:24 Central, so we still have 6 minutes before equities even open. Lots of time in the day left. Prices slow down enough over here. I think if a good setup that followed my rules did make itself available to us, I would probably go back up. Well, I will. I'll go back up to my full position. This may be the first day this week that gold doesn't go to 100% of its open range. That would be quite the move. Should probably stop moving my chart around so much. Is that like super annoying? Having the chart constantly moving. I think that would probably annoy me if I was sitting there watching somebody move their chart around all day. So I'll try and stop doing that so much. All right, if this candle closes below that gray line or outside of that box, then that's the 15-minute close. This is going to correspond to the open of NQ. All right. All right. Pushing down to the bottom. Like it. So this gray box here is another 15-minute fair value gap from yesterday afternoon, which, whew, forget that. We're just going to drop like a rock. Jeez. Well, maybe it will hit the 100% mark. Yeesh, another 110 tick candle. 114 so far. It's not done yet. All right, there goes the 50%. So look at this. So we're just going to point this out for the record. Where did this move start? Started off the midline right here. So again, I didn't take it because that overnight open was kind of there, and I don't really like that. But came down, a little pullback, and then doop. Been 256 ticks. $2,500 a contract. Available to those brave souls who can hold a trade for a while. If this hits 100%, I mean, that would be wild. That would really be wild. Could definitely happen. All right, well, so we'll see what happens. If we work our way back up to the bottom of the range and get a rejection off of it, then that would be my next entry opportunity. If we never get up there, then that'll be it for the day, probably. The way it's moving, I have no earthly idea what it's going to do. Just got to wait and see. I mean, this is a pretty... Each one of these candles is bigger than the next, so that was gaining momentum as it went down. So I would be surprised if it pulled back that far. I think the more likely scenario is we pull into this fair value gap a little bit, which we did by one tick. That maybe that's all it needed. I'm kind of curious, and so I'm going to throw on this line just to look and see. That line is the 9 EMA off the 1 minute chart. Just something to look at. After a strong move like that, the that EMA can sometimes show you where a pullback might stop. So I kind of want to watch and see if that happens. So it looks like that maybe I was wrong about the inside bars on the 5-minute oil chart. So it looks like that first one would have been a winner, barely. Then the 825 candle would have been a winner. And then there was another 840 candle that would have been a winner. Now, if you only take the first one, well, you wouldn't have taken the other two, obviously. But I take that back. It looks like the 840 candle hasn't quite hit its target yet, but that was a big candle, so well, 29 ticks. So maybe the inside bar strategy worked pretty well today. Yeah, so it looks like price is holding that EMA for the moment. All right, let's go look at oil for a second. Oops, where's it at? I got too many charts. I can't find the one I want. This one here. Hmm. Nothing really on the 1 minute chart. No gold line entries, no rejections of anything really. I mean, clearly it is rejecting, but no good entry. Criteria was met. 5 minute chart. Let's see, it looks like that inside bar would have worked. This inside bar would have worked. This inside bar is sort of still in process. We'll see. It's looking kind of iffy right now. Interesting. Yeah, gold's just hanging out down here. All right, well, let's switch over to NQ just because I can't do anything in gold till it comes up to the bottom of that range. So keep an eye on that on another screen. We'll move over to my other account here in NQ, see if it does anything. So we're pushing up here. Where are we pushing up to? That's a question. $1 million question. Where are we going? Okay. So up above this line here was where we had this big push down on the 15th. I mean, just floor fell out and dropped pretty dramatically. All right, so I'm going to refine this down to the 15-minute gap that it is. That's a 140 point gap. So we'll see. I would really like a reason to take an inversion short, but we're not really getting any. For value gaps, the momentum is clearly to the upside right now. When we pushed up, we consolidated, we pushed up, we're consolidating again. There's probably something there to give us direction, but I'm not seeing it. So let's do this. Oops. Jeez. All right, we'll take that fair value gap off the chart for now because it doesn't mean a lot. We just know it's there. All right, well, this is interesting. So if I think if we still think there's upside, this could be a reason to take a chance on a long. This could be choppy. We'll see. We're going to give it a little extra here. Better. I mean, if you're really gutsy, the better entry would have been to hit the buy button as soon as you tapped into this. So we'll see. I'm not super optimistic that we get just a nice big move higher right here, but we could. Yeah, I'm gonna get out. Don't like it. I got out just so it could move up. So for anybody who's still in it, you're welcome. I did what I could for you. I hate not having a clear target, which I don't have right now. Best case would have been the top of this candle right here, which it hit, right? So I think I'm probably better off waiting for more clear entry. Even though this is one of those scenarios where I'm gonna look back on it and I'm gonna say, well, that was pretty clear. Well, let's go to the 5-minute chart. Maybe the 5-minute chart will give me a target on this. Well, let's see. I go way back in time. Take the Wayback Machine back to the. Yeah, I mean, there's nothing up here. Unless we have confidence that it's going to invert this 15-minute gap. There's just not much. Just not much. I honestly feel like taking the inversion down would be a higher probability trade, but it's very counter trend, so very risky. Which is what I tend to do. I tend to be more comfortable with counter trend trades rather than buying pullbacks. Because I feel like counter trend trades are a little more confirmed, because if you take an inversion, there's some kind of confirmation there. Whereas if you take just this pullback where you're just hitting buy inside the fair value gap because you believe it's going to come back down here, test it, and then move higher. The good thing is it gives you a pretty tight stop loss, because if it closes below here, then you're going to stop out. And this is only a 4 point gap. So your risk is pretty limited if you get in down here. But if it just falls, then, you're out of luck. In a case like this, the trend is clearly an uptrend. So but I have a feeling it's going to be kind of a choppy grind upwards. I do have gold on my other screen. We might jump over to gold here in a second because it's trying to get back up to my open range line. It's trying. Doing its best. All right, there's an inversion. If it holds, we'll see. It's whippy. It's whippy. Wait a minute, what just happened? Holy cow. It took me in and hit my stop. I thought my order was in a very safe place, but apparently not. Oh, that's a 10 o'clock candle, isn't it? That's why. Oh, she's coming down now. Woof. All right. Was there 10 o'clock news? I didn't see any news. Did I miss something? Oh, yeah, there was. Wow, that was a big oversight. Yep. Oh, that was unfortunate. Well, lost a couple bucks on that one. Thankfully, it was just one contract, and my ATM had a stop in place. Ugh. Actually, I gotta look at this. This is kind of funny. I sold there. Huh. If I didn't have a stop in place, I'd be in some nice profit right now. Oh, goodness. Yeah, it's coming down now. All right, well, that's too much. That price action is too wild for me to consider participating in. So let it calm itself down. Meanwhile, over here, yeah, gold came back up. It touched the bottom of the range. That's too big of a candle, though. What's this guy here? The little one was 50 ticks. Yeesh. Let's get rid of that yellow line there for now. If it weren't for the fact that this range is so wild right here, this would be an entry that I would take, but 2 minutes after news and a range much bigger than I really am set up to trade with this strategy, I'm gonna let it go. So we'll watch this though and see if it works. All right, we made our money back in NQ, by the way. So no harm, no foul over there. All right, let's mark this out just for fun. So entry would have been right here. Just want to see where, oof, oh, that's 15 ticks. Or 30 ticks. Where would 15 be? 15 would have been here. Would have done what it did yesterday. Gone. So this would have been break even. So I guess that's not too bad, right? Wouldn't have lost money on it. That's wild, though. Should probably add that as a parameter to my trade plan to say that basically the candle range can't exceed something like 20 ticks in order to take the entry. Otherwise, I could scale down, right? If you could take half a position and then double your target and your stop loss to essentially maintain the same level of risk. I guess that would be the correct way to handle that. That's too much math. And days like this don't happen very often, right? This is a particularly aggressive news day, so the easier rule would be to say don't trade NFP day, which is the first Friday of every month. That would probably cause the lowest level of stress is just to not even watch. All right. As this unfolds, though, our range is tightening. Well, to 32. And technically, I mean, the difficulty with changing the parameters based on the candle range is that you would also have to adjust things like when you move your stop to break even. And because that's automatically set in the ATM strategy, you'd have to go in and adjust it or manually move it, which would be a challenge. But technically, I mean, price is still below that range line. We haven't really pushed up here yet. The farthest it's pushed down is 19. So I guess if you're doubling everything, I have it set that at 12 is where I would move to break even. So if we were to double it and say make that 24, still would not have moved our stop to break even. We'd be sweating it out. So today is going to skew my data a little bit in this challenge because we ended up with, I think, what I say, 22 ticks here. 22 ticks there, 1 tick there, so that's positive 23. So technically, I think I'm down 25. I'd have to check. So this would move me to net negative 2 ticks for the challenge. The P&L, though, is not going to reflect that because I was taking 5 contracts the last 2 days and only 1 contract these days because the range was so great. So, but because we're tracking ticks and we're tracking executions, so I think the kind of the intent of the process is being respected and followed. How many people out there do you think bought an Apex account and just bought like 10 contracts long right here and then passed their $300,000 account in one trade? If I had the money to burn, I know that's technically against the rules, but I'll bet people do it. Of course, you might have made so much money in that trade that they would have they would have challenged the fact that you passed the account. They might not have counted it. Let's see. No, there's the drop. So there we go. So just watching this play out, it was ugly and slow, but technically this worked. If you had adjusted the parameters based on kind of the current range, would hit your target there without hitting a stop loss or break even. So would have been an L biter, not something not something I would look forward to sitting through, but it worked. So were there any trades taken on that 5-minute inside bar? I'm not sure if you only take the first inside bar or if you take any inside bar with the exception of like the 9 o'clock and the 10 o'clock candle. It looked like there were some winners in there. Actually, it looks like they all won, with the exception of the 840 bar, which is, I think, still technically in play. If 5, 10, 15, 20, 25, 30, 35. You sat through it for 35 minutes. I wouldn't be too optimistic at this point for that particular one, but that's just me. And I can't believe that news candle. That was wild. Order filled, stop filled before I even knew what happened. I'm just glad it was only set up for one contract. That would have been rough if it was more than one contract. All right. Well, I don't think I'm going to take any more trades in gold. Um, we've already broken through the bottom of the range. We already came back for a really, really, really messy retest. I mean, this, who knows where this is going to go. But the range was too big for me to get into it. So that's it. 2 trades, one perfect entry here, when the other one ended up break even. So it was a winning day today, which is good after 2 losing days. That's that. So we'll move on to day 4 starting Monday. But in the meantime, is my NQ account. It's kind of a dumb trade here. I need a drink of water. I took this trade because I had my fair value gap drawn here, and it looked like this candle, I mean, I guess technically it closed below it by a tick. So I went ahead and sold that. Whipped around. I finally got out of it here just to cut my losses. But then we really fell below it, so I tried again. Loss. Then I just waited. I bought this, and I wasn't certain about a target, so I got out for a small gain. And then, of course, up here was where I had an order. I was waiting for this fair value gap to invert, and I was going to take a short. So I had my order sitting way up here, way out of the range, so that once this closed below, I could move it down and grab it on a, wait for a little bit of a pullback to get in. But instead, I forgot that it was 10 o'clock news, and it came up here, sold me short, and then stopped me out all in about a third of a second, and then rocketed down. So then I took this trade here because at this point we have violated this fair value gap. We came back up here, up close, down close, order block, retested that order block. I went ahead and, I mean, this isn't like super quality, but we're coming down. So I just took a quick 20-point scalp there. That brings me back to almost break even on the day. And I'm watching this gap here, which is kind of this little guy, but it's like holding. So it's, for whatever reason, that level seems to mean something to somebody. So I'll probably wait around here for another hour or so to see if I can get another good entry here. I would love to get this account passed today. No idea if that'll happen or not. Pretty sure I can if I am patient and don't do things like, well, probably things like that. I mean, this trade was probably as much luck as anything. Really can't do anything like this. Those are sketchy, especially considering that it was pre-open, which honestly I had forgot about that. Move it over. All with the news excitement, I forgot that we hadn't even hit the New York Open here yet. Maybe I need to take a break. I don't know. going. I mean, if I had to have a target for the day, it would be the data lows, which are way down here. All right, well, that gap failed for the first time in a while. And it failed with gusto. Haven't hit that yet. Oh. Hit it. Watching this candle wick, if we hadn't tapped that. I was hoping to get a little pullback before it dropped down there, but no such luck. All right, well, I'm going to take a quick break. It's been kind of a fun morning, actually. Feeling pretty good, so I'm going to take 5 minutes, stretch my legs, refill my water, and then I'll be watching the 1050 macro here and see what that presents. If we get any setups, be really nice. I'm looking for a short, honestly. I really want a short. That basically would require us to push down here, pull back, and then invert down and take that second leg down or third or whatever. So that could take a while to form. We'll see what happens. So I'll be back in a minute. Oh boy, oh boy, oh boy. Do we see it? Do we see it? Do we see it? Hmm. Hmm. Oh, we really? Like the minute I leave? Look at this. Oh my gosh. This is a trade I would have taken if I'd have been here. Oh well. All right, we took out this low. We violated the fair value gap. Whoop. Right up to these highs. First target here, second target here, third target here, fourth target way up here. Doesn't look like it's going to get there. Hmm. Trying to get this position here so it looks decent on the screen. I think that'll work. So many lines here. I'm going to get rid of these averages. These are driving me crazy right now. Too much noise. I don't really use them to make any decisions, so. Oh, that's better. Look at that. All right, here we go. This is really tricky in here for me because we're really just kind of consolidating right in here. But we had a nice fair value gap created after we took this low, and we seem to have reacted pretty nicely from it here. So it was a high off of that news earlier. maybe my stop down because I don't want to stop out until we get a close below here, which we'll see. What do we think the odds are we reach back up to that high up there? I don't know, but I'm going to just take my little scalp. All right, we're green for the day in that account now. Now the day can start. I'll put my markers back on after we get a few candles past this point. They're just too distracting. Oh, there's a nice push up. Oh, there it goes. So this was your silver bullet entry right here, I think. Pretty sure. We took a level of liquidity right here, created a fair value gap, came back, retested that fair value gap is your entry, and then you're off to the races. Again, not my cup of tea, but that's kind of the signature you're looking for, which is nice to see that. That's a good sign for the rest of the day, I think. This guy doesn't matter anymore. That guy doesn't matter anymore. We're still just consolidating within this range. I mean, it's a big range, but it's still just, we're still just meandering back and forth. The thing that I like about taking kind of these inverse fair value gaps in here is that you can, like, direction doesn't really matter. Like, when I say that, I mean higher level bias doesn't necessarily matter. Because within any higher time frame trend, there's trend or pullback. There's, you go to a lower time frame and there's, you know, sort of counter trends and mini pullbacks in there, and so you can just take advantage of those little ups and downs. So ultimately, if you got in here, I would think you would target this high up here. Or if you're conservative, you might look at 50% of the wick as a reasonable target right there. So let's put that there just to see if it gets back up to that point. And I draw these levels like this here, not because they really mean much, but just because I kind of want to watch and see what happens here. This is kind of this order block that was formed on the way down, and then we punched through it. So I'm curious to see if it holds a support or not. It's kind of interesting. We pulled back up to this level, right, which was a 15-minute high, which we took up here. And I'll bet if you drew this, let's just do this for fun. Hold on. Because if this violates, this would be an entry. For me, it is. Oh, thank you. Get a little bit out of this guy. Interesting. So we didn't pull back to that sort of optimal trade entry spot. Violated that 100% or the 50% of this range. So nothing super clear there. All right, let's see. Stop out would be a close above this gap, but I don't think it's going to happen. I think we're probably pretty safe here. Mm-hmm. There it goes. So that's the inversion. And actually, I should have had I just wanted my 15 points, but the reasonable target would have been like this point here. Why did it have a hand there before? That was kind of cool. I like that. Anyway, the reasonable target would have been this spot here, which we tapped. Boom, filled. So could have got a little more out of that, but that's the entry. $1,200 more to go. And we'll wait for another one. Honestly, if this one were to invert, this would be another one. I'd be a little more cautious here because we got this massive reaction before. But this is the 1050 macro. We could, at this point, run down here and just take out this low real fast. If you're the kind of trader that leaves runners on, I'd say that would be kind of the best case scenario. I don't trade that way, but see what happens. If we invert this one, it could happen. There it goes. Maybe. Got to close below for it to actually be inverted. Still have 30 seconds left. I'm already out, but it'd be nice to see this thing play out that way. Oop, no inversion. It's holding. We're holding that spot pretty strongly right now. At this point, even if it did close below that, well, I don't know. Yeesh. It's just playing with the bottom of this range there. I mean, and ultimately, I think it's going to come down there to that low, but I guess I don't have enough conviction to sit through the choppiness, so we'll just watch. At this point, that fair value gap has had been too much action in there, so I'm not as confident in it. Okay, so that was a close below. Well, so far so good. Seems to be picking up a little bit of steam coming down. It's trying to they're trying to give some resistance, but say what? It's just waiting for me to do that so it can pull back up here. If that closes up here, I'm gonna actually I don't know. Let's wait and see. Yeah. That was a strong enough pullback right there. I'm gonna not risk it. So again, I got out of it for all you who may be in it. Now it can actually go down there now that I'm not. Now that it shook me out, left the opportunity open for everybody else. Actually, check this out on gold. So gold is back up to the bottom of the range here. Guess my trade plan says I don't trade after 10 o'clock, so. But this actually would have been a good entry if I was paying attention. Because this entry came before 10 o'clock, so this would have been okay. I think this would have worked. Yeah, 124. That would have been my 15. Maybe I need to learn how to set alarms on here so that I can get an alarm whenever it comes back up and touches my range, because that would have been a valid entry and would have worked. So anyway, back to our regularly scheduled broadcasting over here. I just want to see if this comes down and hits this level down here, which I wouldn't be surprised to see it do, I guess is the way I should put that. Well, if it has its eye on that low, it's definitely playing coy with it. It's got to get through this fair value gap, which last time we were down here got this pretty strong reaction off of it. So remains to be seen if it holds or fails, but it's currently holding. It's also the bottom of the open range. Not that that means much, but it's what it is. 5-minute candle closed on its low. Maybe that'll give it a little permission to reach down there. Oh, it's just choppy. Well, I'm definitely glad I got out of this thing, because this would not have been worth sitting through. At least not for me. Just like ping-ponging between these two levels. Down, up, down, up, down, up. Alrighty, well, this is like watching paint dry, so I think I'm going to call it there, and probably take a little bit of a break, come back. Definitely want to try and push this one account a little bit more today if we can. I feel like we're trading well enough that that's a safe thing to do today. So the first winning day in the 10-day challenge series, which is good. Day 3 in the books. I'll try and make my recap video and get it out before before Monday. And that'll be that. So have a good rest of the day, everybody, and a great weekend. We'll talk to you Monday. Bye-bye.